Oh, I think it's time for live. This is Rob Keats, your host with goldsilverpros.com. This is our Tuesday afternoon live stream. It's 1 p.m. Central Time as we're broadcasting this. We're going to get our sound check here in a moment when YouTube catches up and starts playing the video. As a reminder, we have a poll up, and it is called, do you have a backup plan for your job in case you lose it? 57% say yes, 43% say no so far. It looks like we're getting our sound check. Everything is good with the video. Thank you, everybody, for joining in. Thank you, Peter Frohwein, for riding shotgun and doing moderation duties, and everybody else for joining as well. I know we switched back to these afternoon ones, but we tend to grab our European and UK and Australian viewers when we do that. So without further ado, let's get started on the presentation. Today's presentation is Unemployment Crisis May Trigger a Depression. But before we get into that, I wanted to talk about the show's sponsor for today. Let's go ahead and load that screen up. I am talking about none other than Kinesis. And today I wanted to talk about getting 3% cash back on Kinesis. If you're a user of Kinesis and you do business with one of these retailers on your screen, you can sign up for a voucher, use that voucher at any one of these participating retailers, and you can get 3% cash back on your account, just like you would a credit card. This is a cool way to use Kinesis, to use your gold and silver to pay for everyday goods and services using a voucher, getting the stuff that you need, and getting money back when you do it. Of course, we have a link to Kinesis down there. It helps the show if you guys use it. All right, we're going to talk about unemployment, and we're talking about the latest report. Of course, we know we got the data. Unemployment data looked rosy again, and it's looked rosy all year. Here's what I think. I think unemployment is a bull-faced lie. I think the U.S. consumer is crashing down and has no money, and I think that's about to start a depression, and I think it's going to happen soon. And I'm not going to mince words on this program. I think we're headed towards a depression, not a recession. Let's just call it like we see it. Now, we wanted to talk about why we have problems with government data unemployment. I've gone over this ad nauseum, but there's new stuff that I wanted to go over and make you aware of. Now, this looks at payrolls or revisions to the payroll data that we've been having from the BLS. As you can see, we've had 3 consecutive months, and this is one of the reasons because they changed their methodology at the beginning of this year to boost up their establishment survey so it wasn't so far off. Because they do 2 surveys. They do establishment survey, which is a survey of employers, and then they do a survey of the employed, of the job earners. The job earners were always reporting more in unemployment than the establishment survey. So what they did was they adjusted all of the unemployment numbers going back in time using Fugazi data, using garbage data. And they have to constantly revise them down. And the revisions have gotten bigger. So the more they manipulate the data on the front end, the bigger the revision on the back end. You can see these revisions here. That's why unemployment's never quite as rosy as they say. And overall, tighter credit leads to a weaker job market. That's the connection I'm going to make. Since the Fed has started raising rates, we've had a weaker jobs market. And I've got some cool, interesting stuff in a new PBS documentary. I'm going to show you just a little bit of that in a preview of something coming up for Wednesday, where I make this link between the job market, unemployment, and the Fed. Look at the birth-death model. The birth-death model added 378,000 jobs to April's payrolls, the second biggest monthly increase on record. The birth-death model is a guesstimate based upon births and deaths. The BLS doesn't know what that is. And a lot of times, this is why things get revised down. If you want to see the difference in the birth-death adjustment, this is without the adjustment, this is with it. The birth-death adjustment, along with other adjustments, leads to much lower overall employment numbers. But you never hear the media coming back out and saying, yeah, there's a little gap here. Let's explain this gap and why the number is total bogus bullshit. Or let's talk about the revisions. You never see this in the mainstream media. They never talk about it. Here's the household survey response rates have been crashing down. They haven't had as much employment. Payroll adjustments have fallen down. So we've had less rising pay, less overall jobs, and it's right there in the data. I also wanted to point out that the overall job openings are falling. Some people would say it's a good thing. It means you have more employment. You've seen overall job openings crashing down. But when you look into this table of data a little bit more, you find out that the quits rate is about the same. The job offers as a percentage is about the same. Layoffs have gone way up. That's why we have higher unemployment. Layoffs have gone up since the beginning of this year. I've talked about it. So the overall employment rate is the same. The employment rate is still 60-40. And labor force participation rate, 62-60. Here's the labor force participation rate. This is the simplest measure of employment. It's gone down since the tech crisis in 2000. That was its peak right here. We had the highest overall percentage of employed right there at 67.2. It is now at 62.6. It is 4.5 points lower than it was prior to the tech crisis. This is with all the money printing for those 20 some years has done squat for employment. So has the Fed done their remit? Well, we're going to show you here in a moment. I'm going to load a video from PBS talking about this. I think it's extremely important. Here we go.
In part by suggesting she'd maintain the Fed's massive balance sheet of assets it had bought and to keep short-term interest rates low.
The FOMC reaffirmed its view that the current 0 to 1/4% target range for the federal funds rate remains appropriate.
The Fed justified its actions in part because the fears about runaway inflation hadn't materialized, and in fact, it was running below its target of 2% because economic growth was still low. But Yellen's partial easy money pullback didn't dampen concerns and criticisms about the ill effects of the Fed's policies.
So that was interesting commentary from this PBS video. The interesting thing about this PBS video, I'm going to show you another little segment in preparation for what we're going to have on Wednesday. We're going to have a very special video on Wednesday. I have an interview with my good friend Nathan Independence Money talking about this video, and we're going to go through it piece by piece. Stay tuned Wednesday for that. We're really going to break down what the issues were and what we see going forward, and we're going to break down PBS's view of the Fed's role in all of this and what's actually going on. But I think it's interesting. Wait for Wednesday for that video. You guys are going to get to see that. The unemployment situation is really becoming an issue because people aren't stopping spending money. I'm going to show you where people are still spending money and getting themselves into serious problems. The personal consumption expenditures has done nothing but gone straight up. Now, during the pandemic, it went down because people were staying at home. They weren't eating out. The economy had stopped. But as soon as they restarted it, we got very quickly, September 2020, almost back up to where we were in terms of expenditures. And then it has just been on a rocket ship since. This is actually a steeper incline of expenditures from consumers than we had the entire time prior to the pandemic and even through the other recessions. You see a small dip here during the Great Recession, no dip really noticeable during the tech crisis. People still had to spend on rent and food and things. And it's gone way up. And I think that's because of inflation. We've had such big inflation that consumers are spending more. The problem is, up goes their household debt as well. According to usbank.com, change in household debt has absolutely exploded. Student loans gone up moderately. Auto loans have gone up a lot. Home mortgages have gone up tremendously, almost double digits. Credit cards have absolutely exploded. So how are people buying stuff here? Their expenditures is not coming from wages because wages aren't rising as fast as unemployment. Unemployment's rising faster, and so is CPI is rising faster than wages. And so you've got people putting money on credit cards, taking things like personal loans. This is his other, taking personal loans and other lines of credit, HELOC, things like that. That's where you see 15.9%. So if you want to know who's holding up the economy, it's the consumer, and it's because they're spending on credit card. They do not have money. Going back to the premise of why I think unemployment could be so dangerous, it's dangerous because it looks as though once the consumer gets fully bankrupt, and they're really close, their amount of personal credit that they're spending is off the charts, but their employment has not gone up. It's gone down 4.5 points. And their wages have gone up, but they have not gone up as much as inflation. So the ones that are working are earning less and able to buy less as prices are rising faster. But we also have more people that aren't physically employed living off the government doles. A lot of that pandemic money is gone. And that's why you've seen the absolute explosion in credit card debt that we've had now. That's why that's gone up so much, because you've had the issues with personal expenditures and employment. People simply do not have the ability to spend more money. People simply do not have the ability to spend more money. And we're going to go back to this PBS documentary, and I'm going to show you at about the hour and 6 minute mark what's going on today. PBS did a really good job of covering this. So I'm just going to go ahead and show you that as a preview for what we're going to have, a very special presentation out on the channel Wednesday. Here we go. Give me a moment while I forward to the right spot as we get the video loaded. Here we go. The orgy of speculation. That's where we are now. We're in the orgy of speculation stage as PBS covers this.
The coronavirus pandemic has left millions of Americans out of work.
The people have gone now without 4 or 5 or 6 or 7 paychecks and starting to catch up. They need food. It's the most basic thing.
In the months following the Fed's rescue, we saw a troubling disparity.
Have you got any income at the moment?
No. And we have kids too, so.
As businesses were shuttered and millions of Americans were living on the edge, the markets did indeed look like a no-lose casino, thanks to the Fed's safety net.
The economy may be facing major hardships, but the stock market is thriving.
The best quarter for the Dow in 33 years, it surged 17%.
We ended up in a world where bad news was good news.
The unemployment rate is now a staggering 14.7%.
Bad news for the economy was good news for markets. Why?
In the midst of all the economic turmoil, Wall Street actually closed out its best week in 45 years.
Because when people saw bad news, they said, the Fed will have to do more.
And today the markets say, bring on the next quarter.
And then over the next few months, we saw one record after another in stock markets.
Stocks surging even as America enters its darkest chapter yet of this pandemic.
Even after the initial emergency passed, the Fed was pumping $120 billion a month into the economy through quantitative easing on an indefinite basis. The fire hose was simply turned on and left on the curb. You know, the extraordinary measures of 2010 literally become the daily operating procedure of 2020.
The S&P 500 hitting another record high today after surging 55%.
The stock market didn't just regain all of its losses in a matter of a month, but started breaking new records.
I see quite a bit of green on the markets this morning. Dow, S&P, NASDAQ, all of them higher.
Over the next 2 years, tech stocks would soar.
Apple is now the first publicly listed U.S. company to be valued at $2 trillion.
Tesla shares are soaring.
This company has just gone through the roof this year. The stock price has more than quadrupled.
Right now, it's a seller's market, and homes are selling fast.
The price of real estate would shoot up across the country.
The housing market has never been hotter.
And corporate America would take on even more debt, which investors gobbled up.
Massive issuance of corporate debt.
More than $10.5 trillion.
For the richest Americans, it was an extraordinary time.
Mark Zuckerberg has increased his wealth during the pandemic by more than $37 billion.
Elon Musk has added over $10 billion to his wealth just this week.
Jeff Bezos reportedly earning over $50 billion this year.
Billionaires now hold 2/3 more in wealth than the bottom half of the U.S. population. Let that sink in for a moment. Now, as I mentioned,
just the billionaires in the United States, from March 2020 to February 2021, have grown their wealth by $1.3 trillion. $1.3 trillion.
So as you can tell, the cool thing about this PBS documentary is really focusing in on the amount of wealth inequality that we have across the system. Let me get my thing focused. There we go. The wealth inequality we have and why unemployment could break the U.S. consumer and lead us into depression. The chart that I had up before about personal consumption and spending, people are spending, but they don't have the money to spend. They don't have the consumer income. They don't have anything that they need to hold up this economy. They simply do not have what they need to hold up the economy and to keep everything going. Everything's spent on credit card. They no longer have the wages to keep up with it. People are taking any job that they can get. If you look in the unemployment data, people are taking 2 and 3 part-time jobs without benefits just so that they can have, those jobs, just so that they can, have access to money for their kids, for their families, that type of thing. If you go back to this chart, they're still spending, okay? The average wages, if you look at wages, has gone up 3% in the last year. If you look at this, it's about 3.2, 3.3% from 2739 to 2862. But you look at the spending, that's gone way up more than that. At the same time, labor force participation has not gone up enough to support all of that. And I think at the same time, people are spending all this debt, going back over the charts. People are spending egregious amounts of debt, and I think it's going to lead to depression. I think what's going to happen is consumers going to stop spending. Companies are going to start going out of business because they don't have that money coming in. They're not going to be able to pay off their debt. You're going to see bankruptcies in the corporate sector. You're going to see corporate debt start to collapse. We've seen the banks start to collapse, and you've seen like the CARE and the regional banking indexes collapse here in the US. And the Fed and the FDIC are trying to hold it up and keep people in it, keep people in the system. But you saw the record amount of withdrawals, people going to cash. People were putting money in money markets. They were putting money, you know, under their mattress. They were trying to pay off bills. They were putting money wherever they could, but they weren't in banks. And what's going to happen is people are going to spend less. There's going to be less use of cash. I think the corporates are going to feel it. They're going to start going under. And as the corporates start going under, you're going to lose more and more jobs. And that unemployment issue is going to start spiraling out of control. The Fed has not maintained its mandate to maintain unemployment. It's going to crash down, but that's because of the currency issues. The currency issues are causing the issues in the debt system, and the debt is causing the issues in the debt in the banking system, which is now starting to affect corporates. And the consumers coming along saying, I don't have money, I can't buy things. And what you have right now is an incredible amount of jobs being unfilled, about 10 million jobs being unfilled. But more than that, you have a higher percentage of people unemployed in this economy than ever before. And that's led to two things. One, you've got a black market economy. That black market economy is where people are spending, and they're not reporting it into the official statistics. It's going to lead, you know, to some issues with managing the economy because the people at the top aren't going to see that black economy, which is already here. The second thing is we're going into a depression because people don't have enough money to buy goods and services. People are going to be bartering. People are going to be reusing. One such example, I'm looking at housing right now, and I was looking at doing some sort of remodel. I can't find remodelers. They're all busy right now because everybody's remodeling instead of buying new houses. And that's why the new home sales have started to come down. Why are people remodeling? Well, because you have kids coming to live with grandparents. And when kids are living with grandparents, you got to have more space. You have the grandparents coming to live with the family. You have more multi-generational families. And that's also going to cause a crash in the housing market because you're going to need less new houses. You're going to have too many existing houses as people move in and start abandoning. And that's what's going on. On to the poll. Unemployment is breaking Americans. What can we do about it? Do you have a backup plan for your job in case you lose it? 51% say yes, 49% say no. Thank you for voting in the poll. That's what I think is going to happen. I think unemployment is going to crash the economy, and I think it's going to trigger a depression. I think we're right on top of it. Last thing for you guys today, as promised on the last episode, we have started, along with some friends, a very new group that we think you guys are going to like. It's called United for Sound Money. It's on Reddit. This community was created through collaboration of myself, Citizens for Sound Money, and lots of other individuals who are interested in continuing the debate about sound money in a friendly manner. So we're combining forces along with our crypto friends and our gold, silver friends, our asset-backed digital currency friends to create this Reddit where everybody can come and take a part in this and talk about sound money in a way we will not tolerate bashing, negativity, or any of the other, explicit memes we may have seen in some other Reddit boards. This would be family friendly. It'd be a place for everybody to come. Yes, you can express your opinion. We don't mind debate. We just want people to do it respectfully. Please come join United for Sound Money as we join forces talking about the cause of sound money in our society. When this system crashes, we're going to need people to stand up for sound money. And instead of being divided and conquered in the crypto crowd and the gold crowd and alternative currency crowd, we need everybody to come together. And that's really what this is for. It's for everybody to come together to join into the conversation together as a group so that we can all kind of ride into this storm together and figure out what's going on. It's cool to be a part of a community of like-minded people when stuff is happening. This is a place you can talk about everything. You can talk about banking. You can talk about where to get your gold and your silver. You can talk about what you're going to do if you need to barter. You can talk about, you know, is silver or gold your favorite? You can talk about whether or not you're going to adopt Bitcoin as part of your plan. You can talk about happenings in the crypto space. Are we going to the CBDCs? Are the private cryptos going to be an option? Will people turn to that? Personally, in the black market, I think they're going to turn to anything. I think they're going after every crypto you could is going to get utilized in some way because it's going to be a way for people to pass value. Will it be the ultimate backstop? No, I think there'll be gold and silver, especially in the financial system. But I think Bitcoin and cryptos will take part. I think there'll be a part of what people use. And so we wanted to open it up for that too. So there you go. There is the new Reddit group, United for Sound Money, where we combine our crypto and our gold talk and any other macro talk that you want. Now, what's really cool this Thursday, I've got a very special interview coming to the table. Steffi's going to be joining us. I joined her channel last year. We're going to be talking about her work in the fintech and crypto space, as well as 𝘾𝙃 from CoinGeek is going to rejoin us and give us all the details on what's going on in crypto, and also his opinion on the bank failures and what that can mean for the economic system. Stay tuned to that. That's coming in a couple of days. And tomorrow night, very special presentation. Me and Nathan from Team Independence Money talk about this PBS video that I previewed here on this one. We're going to go into depth. We're going to do 2 videos on it. We're really going to walk you through it in detail, what happened. And in the second video, we're going to break it down and give you solutions. We're going to give you things that we're doing for ourselves that you may want to do. Of course, do your own research. You know, we're not your financial planners, but we're going to talk about what we're doing to deal, real steps that you can take to deal with it. That's coming on the second video in that series, which starts tomorrow night. And again, Thursday, our crypto guys join the channel to talk about what's going on in that space and honest money as we kick off United for Sound Money. And remember to pay attention to our channel sponsor, Kinesis.money, affiliate link down there. If you're interested in signing up an account, it does help the channel. Until next time, that's going to do it, everybody. This has been our Tuesday afternoon live stream. I didn't see any super chats or any questions. Looks like you guys have them all answered. So until next time, this is Rob Kientz, goldsilverpros.com. Stay tuned to the channel. We got tons of content. You can stay right here. And then Wednesday night, leave your browser here, because Wednesday night we got that very special first part of the presentation, myself and Nathan going over the PBS documentary. And then Thursday, great content from our crypto crowd and Sound Money crowd. And then Friday, of course, our weekly market wrap, where I tell you everything that's going on, gold, silver markets, and the rest of the economy. Stay tuned to Gold Silver Pros. Till next time.